We're here with David Morgan from the Morgan Report on this week's Currency Countdown. This is a wonderful day. Markets are all up. Job numbers were better than expected. Can you talk to me about why you think the market's up today?
There's always, more buying. That's the real answer. But the subset of that, of course, probably job numbers has something to do with it. The job number thing is something that does move the market, or at least it appears to. What I find rather fascinating about the job situation, or the job numbers specifically, is that if you back out the seasonal adjustments, what you usually find is they're not nearly as rosy as they're painted in the mainstream press. And I use John Williams' shadow statistics that will give us a better idea of the actual truth behind those numbers. But nonetheless, the market moves on emotion. Looks good. Bernanke spoke yesterday. His basic bottom line was, things aren't looking too bad now. We're going to hold off on any, credit easing for a while. Of course, they're doing all these swaps with the Europeans that they didn't mention, but, so be it. And so, I would say, there's a feeling of things are okay right now. And because things are okay, maybe they're going to be a little brighter in the future, and the markets are reacting in that manner. But, again, the markets can turn either direction rather quickly.
I agree with you completely. And I love our ongoing discussion on truth versus media marketing. And on that note, can we discuss the euro? What is happening with the euro right now? Can you bring our audience up to speed?
Well, hopefully. Of course, it's my opinion here. But there's a couple things, I'm fond of often saying in any of my interviews. I don't say it on every one and be a broken record, but the market knows more than anyone. And if you look back during this entire euro debacle that we've been talking about on Currency Countdown for the last several weeks in a row, and that's been our main topic, as it's been everywhere else. If you look at the price of the euro, it wasn't hitting new lows. Now, if we're so close to the Greek situation blowing up, or to use the analogy, falling off a cliff, and we're just, right at the edge of the cliff, then the euro, the market, would be saying, we're hitting new lows and we're ready to fall over. But that isn't what we saw in the market. Now, what we're seeing in the market is that the euro's done well, even as the dollar has gone up. And now that Germany's basically stepped up to the plate, they're going to sign on for more debt. I think the market's tired of the story, and I think that it's in a lull here. I believe what I said about the jobs market, that in the mainstream press and in the mainstream thinking, there's a big sense of relief. Things are going to be okay for a while. And the market is indicating that as well. So I'm going to go along with the herd here. Not that anything's really been resolved. I want to stay consistent, but I also want to give the idea of that is not probably going to be the main news in the Currency Countdown for a while. We'll be looking at it all the time, of course. But what I mean is that I think the story's old and worn out, and there's something else that's going to be, grabbing our attention here, perhaps.
Okay, so we have a situation, again, where the truth is not necessarily reflected in the emotions in the existing marketplace right now. What would you recommend for us as investors in dealing with this at this time?
Well, for the investor, which is in my definition, and it's look it up in the financial dictionary, an investor usually is like a buy and hold situation where you see a major trend, you get in relatively early, and you get in some kind of a growth situation that you can hold for usually years. That's an investor. In today's environment, there's hardly anything out there that I personally like as an investment. Almost everything with this topsy-turvy market almost requires a trader type of a mentality, which is to take advantage of distortions in the market on a very short-term basis. I mean, day trade, hourly trade, week trade, position trade, on and on. I don't want to break them all down. But the only real investment opportunities that I see are basically in the commodity sector. Trend is very clear, but they are volatile, and you definitely need what you're doing. And I'm not necessarily referring to the futures market. I'm referring more to what you do there with at your other websites in the rare earth space, and what I do in the Morgan report, which for most investors, you're better off looking at the underlying equities as a long-term play rather than be in the futures market, which is the pros. It's really not for everybody. In fact, I actually discourage most people from even getting in it. You're far better off, in my view, to be in well-selected resource companies.
Let's talk about gold. We haven't discussed where gold is recently. What's happening with gold right now?
Anytime there's massive buying or massive selling, you're going to get price movement. There was massive selling in the gold markets on paper yesterday, somewhere around the 300,000 contract level. GATA just put out a piece that can be verified. I think it was 110,000 contracts in that article. So I'm looking at the futures month, all told, the whole thing. But again, it's not the number what's important. What's important is that there was a lot going on to sell gold on paper and drove the price down substantially. And of course, the question sometimes comes up, well, why? And the answer is because somebody wanted the price to go down. Now, there's several ways to make it a very advantageous trade to the professional. One that can be massively short, so just getting it to come down will make the massive profits. The other thing is, like near options expiration, is to take advantage of a lot of newbies that get into the leverage markets via the options markets. So they could load up on cheap options that no one really thinks is going to have any value. And then after they've loaded the boat, so to speak, they come into the futures markets and just harangue it down by massive selling. Now those options are leverage on top of leverage. I mean, a futures contract is highly leveraged, but an option is an option on a contract, which is even more leverage. So this is a type of activity that takes place. And, you know, I was on the phone early this morning doing a quick update for some of the better known people in the industry, I'll say. And we were discussing, it's interesting that, you know, these things have happened time and time again, and yet the authorities that would be looking for this type of activity seem to never see it, never mention it, never talk about it. The only time you even hear about it is on shows like Currency Countdown, the GATA folks, and there's others that mention it, of course, but never in the mainstream, other than, you know, the facts, which I'll give credit to. You know, some are printing how many contracts are sold. Some are basically the same story. The amount was, I think, 110,000 contracts, and that was in the near month. I'm not looking at the SLV. I'm not looking at the other places you could short and take advantage of massive sales and profit from it on the short side. But it's the same old story. It's the same old crime. And it's going to happen again and again. But we're winning. And the reason we're winning is that they have to amount much more volume on paper to get the same movement. So in other words, when X amount of silver sales short would drive the price down $2.50, it now takes 2 or 3 times as much. So what that indicates is they're running out of ammunition. They really are probably, in my view, my opinion, concerned about keeping gold and silver in check as a metaphor, because the dollar is the real problem, and it's the debt markets that are the real problem, as we emphasize every time on Currency Countdown.
Thank you so much, David, for joining us this week on Currency Countdown.
My pleasure, Tracy. It's always fun.
And I'll tell you, for everyone in our audience, if you want to be up to date on what's happening on the economy, and believe me, the Morgan Report covers more than silver and gold. They cover uranium, and the analysis is good for any investor or trader. Just go to Currency Countdown and you can subscribe to the Morgan Report. Thanks again, David.